Hello and welcome to Mint. In this episode, we're going to talk about RBI's second quarter decision, where the RBI governor has left the key policy rates unchanged but cut CRR by 25 bips. We have with us Tamal Bandyopadhyay, who is not only the deputy managing editor of Mint but also a banking industry expert. So, Tamal, what does this move signify?
Well, it's a sort of compromise formula, I would think so, because Finance Ministry was pretty keen that Reserve Bank of India should cut rates. In fact, for the past 6 weeks, Finance Ministry from various fora has been talking about a calibrated approach by Reserve Bank of India and cut rate, and it had taken a series of so-called reform measures, and finally yesterday Finance Minister announced, or rather laid down, the fiscal roadmap. So I would not call it pressure. I would just say it's very sincere efforts by the Finance Ministry to convince the country's central bank to cut rates. But inflation continues to be high, and the Reserve Bank of India did not want to completely disappoint the Finance Ministry. So Subba Rao has taken a midway cut in cash reserve ratio, infuse money. So typically in this second half of the year, credit demand picks up, and during festive season there is people hold more cash. So banking system suffers from liquidity tightness. So it would take care of that.
But at the same time, we've also seen some banks cut rates, and that obviously is the Reserve Bank is well aware of that move. So how do you marry that particular move with this?
No, logically, if you have more money in hand, so your liquidity situation eases, so you should cut rates. But unfortunately, not too many banks have done that. Since January, Reserve Bank of India has cut 175 basis point CRR. So we should have seen actually more banks cutting rates, but the monetary transmission is not that perfect in Indian context, so it has not happened that.
So after 13 successive rate hikes, it cut rates in April.
Yeah.
And now it's trying to strike this balance between inflation and growth. Now we all know that this is a debate that is ongoing. What's your perception now?
Yeah, if you see the policy, RBI has taken stock of both, and it has raised the inflation year-end projection for the second time. Now it's gone up to 7.5%. It has cut down the growth projections in line with most of the agencies, not to 6 but to 5.8 from 6.5. So it is worried about growth, but it is more worried about inflation. So on balance, it continues to think or consider inflation as enemy number one, which is why it is hesitant in cutting rates. So this is a fine balance, and it continues to do that.
But markets don't seem to appreciate the move of RBI, and credit rating agencies are still close at our heels trying to downgrade India. So we are there. What's the way going forward?
Way going forward, market doesn't appreciate, but Reserve Bank of India has no responsibility to make market happy. It should make economy happy. That is one part of it. Yes, credit rating agencies are keeping a close watch on India, but had Reserve Bank of India gone for a rate cut, I think that would have been not appreciated by rating agencies, because we are trying to manage our fisc, but we are not yet there. So maybe credit rating agencies will appreciate what Reserve Bank of India done. Now what's next? Reserve Bank of India Governor Subba Rao has made it amply clear that by the fourth quarter, that's March quarter, inflation will soften and there will be room for rate cut. So I would like to believe at this point of time that there would be rate cut before the end of this year. There's a December policy, and then after that there's a January policy. So if not in December, I think we can at this point of time we can say with reasonable certainty that we would see a rate cut in January.
So as we see, the industry will have to bear with this balancing act that the RBI is trying to match between inflation and growth. Industry captains and the markets will have to wait and watch, perhaps till the March quarter, as Tamal suggests. So thank you, Tamal, for being with us, and please keep watching Live Mint for more updates. Thank you.